Hi, I'm Mitch Rzinski for REIT.com. I'm here in San Francisco for REITWorld 2013, NAREIT's annual convention for all things REIT. Joining me today is Bob O'Brien, U.S. Real Estate Service Leader for Deloitte. Bob, thanks for being with us today.
Well, good to be here. Thank you.
Deloitte's latest forecast for 2014 calls for the commercial real estate recovery to slow. What are some of the factors at play there?
Well, you know, the pace of the recovery since 2009 has been incredible. If you take a look at capital markets activity, improvement in fundamentals, transaction activity, all of it has been very strong over the past few years. We think the industry has really hit its stride. And so although we're still predicting improvement in 2014, we just think that that pace of improvement slows down a bit. A couple of key factors, I think, from a fundamental side, we're finally starting to see some additions to supply. We're starting to see an uptick in development activity. I think everybody is concerned about the potential impact on interest rates of the Fed tapering. And, you know, that's still predicting modest economic growth.
And what is the outlook for development activity?
Well, we've certainly seen an uptick in development activity. Development activity in multifamily residential is well established. We're starting to see a reasonable amount of development activity in office in selected markets. We're seeing increased development activity in industrial, driven by e-commerce primarily. It's not the 1980s by any means, but it's better than it was a few years ago.
And finally, Bob, if you were to give a REIT CEO one piece of advice for navigating through this upcoming year, what would it be?
Well, you know, we think we're at the point of the recovery where, you know, after several years of focusing on deleveraging the balance sheet, on improving the portfolio, it's now time to focus on operations and really try to drive, you know, improved EBITDA or FFO margins. We're seeing some REITs using business intelligence and analytic tools to really identify opportunities to optimize pricing, to reduce costs, to improve margins. And if I was to give a CEO one piece of advice, I'd say this is the right time to look at that. These tools that exist now are very powerful.
Bob, thanks for taking the time today.
Great, thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.